Hello, welcome to Dixon Realty's second quarter of 2024 Reno Sparks Market Update. Thanks for joining us. We're going to jump into some quick national news that we've seen in the last quarter of this year, and that is an uptick in active inventory throughout the country. So you can see here by this maroon line that our active inventory is up 28% from this time last year, which is measured by the bright red line here of 2023. So some historical context, you can see years of 2019, 18, 17, pre-pandemic years. Those are more balanced markets or average years. And you can see that we've been significantly less than those years, 800,000 plus in active inventory, where here you can see sitting somewhere in that kind of 500,000. So 300,000 less homes on the market. But we're starting to eat into that, as you can see here. But it really has been low inventory that's been the story for quite some time that has sustained pricing both locally and across the country. So it'll be interesting to see as that inventory grows, if it grows, how will that affect pricing? But let's take a look at how this translates to things happening here in our local market. So we saw a price of 600,000 hit in June of 2024. We haven't seen that price since April of 2022. So it's almost been 2 years. And again, we've only hit that one other time. So this is the second. We've yet to hit the peak that we saw back in what would be May of 2022 of close to $615,000. So from a seller standpoint and from a market stability standpoint, this looks really healthy and really good to have appreciation over the course of the first 6 months here. It'll be interesting to see, though, can it sustain based upon inventory growing? So let's take a look at demand and how that's been. So demand-wise, we had 403 homes that were sold in just last month, and that's versus last month of 421, so down 4% month over month, and then down 9% year over year. What's interesting is that our mortgage rates have been increasing to some degree since the beginning of the year, but they're not much higher than they were this time last year either. So the softening could come from just the fact that we have, again, higher prices relative to this time last year, and that's making affordability a little tougher. Could be those that are skeptical headed into the election year here. Could be several reasons, but overall, we're seeing demand slow a bit from both the home sold standpoint as well as from new contracts. You can see for our new contracts, our numbers that were down are even greater than homes sold. We're down 13% month over month with only 388 new contracts, and then down 14.6% year over year. So that sharp decline right there is unusual for June. In a typical year, our seasonality will have that we're light come late fall, winter, early spring, and then spring starts to pick up, and we usually have our most and our highest demand from the months of May, June, July through August, and maybe even April in there as well. So interesting to see that fall off as much as it did just month over month. Our new listings are showing, though, that we're not going to have a flood of new listings that are going to increase the active inventory a ton, as we're down 11% month over month, and it's pretty much the same year over year. As you can see, 559 versus 557 of last year. So what is happening with our active inventory? Well, it's growing, but it's not growing because we have a bunch of new listings coming on. It's growing because we have less demand. And so hitting 847 homes available on the market at the end of June shows that we're getting back to kind of normal active inventory levels. And normal, while you don't see 2019, 18, 17 on here, you would see that they'd be around this range up here of 1,200 to 1,400. That's kind of a normal market that we'd see pre-pandemic. So we're still about a little less than half of those numbers, but substantially more than we were at the beginning of the year with 400 plus homes active on the market. So again, that at some point will have to affect the median home price. So we'll be shocked to see that median home price with our inventory picking up and less demand going much past 600,000 this summer, but anything could change. And we do know that if interest rates are to decrease at any point, that will unlock new buyers at each price point. That could affect, again, higher demand, which could affect seeing appreciation coming back. Days to contract, this is a great graph just to show how quickly the market's moving. And we can see that it's kind of level from month over month here, just down slightly 4%. But 20 days to contract means when I go to put my home on the market, on average, I'm getting in the contract within the first 3 weeks. That's still a pretty quick market. We found that prior to the pandemic years, it was taking homes anywhere from 30 to 45 days to get into contract. So again, that seems slower than usual, and it is, but from years before the pandemic years, that actually is a much quicker market. So if you're a seller and it's taking a little bit longer to get your home sold, again, just know that that's actually, over the long term of things, a pretty normal thing. And then the last here is just our close price versus our ask price. So when sellers are asking for their listing price, how close are we getting from the buyers? And we're getting close to 99.6%. That's just slightly down month over month, and it is slightly up year over year. So typically we're between 98, 99%, so we're a little bit above typical. So again, market-wise this way, things still look pretty solid. So hopefully this has been helpful. Thank you for joining us. Look forward to our third quarter update in 3 months. And if you have any questions or need any other information, please reach out to your favorite Dixon agent. And thanks so much.